Hello, and welcome to Fintech Sandbox's Demo Day 2025. I'm Sarah Biller, and alongside my co-founder David Jagan and our amazing team, our mission at Fintech Sandbox is to remove the friction and the cost the world's best fintech entrepreneurs can experience when they're procuring much-needed data. It's hard to believe, but Fintech Sandbox is 10 years old this year. And across the past decade, we've been witness to multiple market cycles, some of them up and some of them down. But along the way, we've seen tremendous industry innovation. And today, we know we stand on the doorstep of the next big thing in financial services. There are several factors, such as the next generation of AI or expanding access to high-performance computing that are among other factors that make it all but certain. But one factor has endured across time, and that is the importance of data. Our work would not be possible without the incredible and forward-thinking data and infrastructure partners that we have, as well as our industry sponsors. And today, we are so immensely appreciative of their support of us. Because of their commitment and their vision for what is possible, Fintech Sandbox has enabled free access to high-quality data sets to almost 400 startups. These innovators are building cutting-edge payments, they're in lending, investing, they're working on insurtech products and next-generation banking capabilities. And frankly, they're doing a whole lot more as financial services and fintech push the industry boundaries. Our startups are located in 19 countries across 5 continents. And I can say with certainty, we're more excited than ever for the future of financial services. In fact, we encourage any of you fintech entrepreneurs, wherever you are in the world today, to learn more about how you can join our Data Access Residency program. Please check us out on our website at www.fintechsandbox.org. In fact, we are coming to you today from London FinTech Week. And today's demo day includes startups not just from the United States, but as you might guess, the United Kingdom, as well as Scandinavia. The 5 companies we're going to hear from shortly are uniquely focused on optimizing the way that finance works. They are deploying new tools to manage climate risk. One is optimizing for payment terms in the fast-moving supply chain and logistics area. Others are applying data-enabled analytics to improve trading. And 2 of them are delivering next-generation banking and financial services. So please settle in with us, take a minute now and introduce yourself. You can share your name and where you're dialing in from using the chat function on the right side of your screen. If you'll navigate to the Startups tab at the top of your screen, you'll be able to see more about each of today's startups. And you can also use the Q&A panel on the right of your screen to ask questions about the startups. When you do ask those questions, please make sure you let us know what company each question is for so we can be sure to direct it to the right team. Please note there will also be a poll which will pop up on the right-hand side of the screen, which you can use to also express interest in learning more about each company. And just like when you ask us a question and you tell us what company you're asking it to, please make sure you submit a poll for each company that you're interested in talking to. In between the startup presentations, you're also going to hear from members of our team at Fintech Sandbox and Ostro from industry leaders. We're very appreciative to have some distinguished guests with us today. These include Richard Murphy, from Fidelity Center for Advanced Technologies. He's going to discuss the importance of engaging with the global fintech ecosystem. We're happy to have Pamela Alexander of KKR to discuss the critical role corporate foundations are playing in advancing financial inclusion. And last, but equally important, Adam Fox from MassMutual will talk to us about the importance of data and at the intersection of health and wellness. So with that introduction, let's get started with Demo Day.
Floods of the past do not give you the flood risk of the future. That is easy to say, but extremely hard to capture into flood risk models. We at SAP Analytics are pioneering an approach for flood risk predictions. My name is Helge Jørgensen, one of the co-founders and CEO of SAP Analytics. We are a climate tech startup out of Norway, and we are proud to say that we have already secured 40% of the insurance industry in a home market. We have also just launched our first US office here in the US, where I'm located, and we're now excited to expand our technology into the US market. We are pioneering the approach for flood risk predictions, providing crucial information all the way down to the building levels for flood risk to insurance companies, asset owners, and banks. The problem we are seeing today is the two mega trends, urbanization and unpredictable weather. This gives us an increased vulnerability for urban flooding in our cities. Our cities are growing, and with every new paved surface, it becomes less permeable. And we're also basically removing all of the natural water paths. And all of this gives us the higher probability of being flooded. And then, with the climate change, which means more frequent and intense rainfall and unpredictable weather, combining these, then this makes urban flooding one of the fastest growing physical risks that we see today. And imagine a life without insurance. That is actually the case for many people now. The reality is that insurance companies are leaving areas that are prone for flooding because they can't cope with the risk, dropping customers, leaving homeowners behind without any insurance. The main challenge for the insurance industry and the banks is to understand the flood risk. What is the probability of exactly this building being prone for flooding? And this is also a big global problem. What we see in the US now is a collapse in the home insurance system. In the UK, banks are not offering mortgages in high-risk areas anymore. In Australia, we see a spike in insurance costs, and banks are not offering loans in high-risk areas. It's a big and it's a growing problem. By pioneering an approach for flood risk modeling, we have now built a technology that provides high-resolution flood risk data all the way down to the building, as you can see in this picture. We do this at scale. We're now offering this in Northern Europe, Australia, and also in the US. Insurance companies use this information to better understand how exposed the portfolio is for flooding and also for pricing new businesses. To define and understand the flood risk, we need to understand the details and the geographic information all the way down to the street level. And to do this, we need to combine data and information from satellites in outer space all the way down to the details in the streets, like sidewalks, speed bumps, and all of the details within the neighborhoods. By combining millions of data points and dimensions, we can provide crucial insight on flood risk at the building level, at a solution that separates the flood risk from one side of the street to the other side of the street, and as you can see in this case, neighbor by neighbor. We do this by combining geoscience, geology, hydrology, geomorphology into a technology. And then we run 600 physical parameters to each individual building at a high resolution, a 3 by 3 feet resolution, basically the size of a coffee table. And we do this for each of this building to understand if this building is prone for flooding one time in the future, or if it's not prone for flooding. We then combine the knowledge side, the geoscience side, with our unique machine learning model, which is trained on millions of claims that we have received from our insurance partners. But to add to the complexity, you're also dealing with dynamic data. The Earth is always changing. Our cities are growing. That means new buildings and new infrastructure need to be incorporated into the models, into the data, into the terrain model, into the land use covers, because all of this will impact where the water will flow. So we now built our technology that we can capture these changes, incorporate into the models, so that we always provide with an updated flood risk to our customers. This approach gives us a unique ability to understand the flood risk, and it can help insurance companies, banks, and asset owners. And here we see an illustration on how the model works. For each of these buildings, we have these 600 physical parameters, the geoscience, geology, hydrology, and so on, combined with the machine learning models into this matrix. And then we can see that this building has a probability of being flooded for 92% given bad weather. And then, as in insurance space, it's all about data, numbers, to be able to understand the flood risk, to better keep insurance profitable and also to be sustainable going forward. We provide our flood risk data as a deliverance to insurance companies, so it's a data delivery to them, so they can incorporate into their existing pricing models and also to work on existing portfolios. And it's also a yearly subscription. What we see here is data from two POCs insurance companies. If they find themselves too far on the right side, as is the case for insurers too, they're basically losing money. So, but with our data, they can move to the left. The insight our data provides to insurance companies and also the banks gives them the data so that they can work on existing portfolios to price them more accurately and work on improving their vulnerability for flooding, but also to work with these data and pricing new business coming in. This will reduce loss, increase the profitability, so that companies can move towards the left. And one more thing, we can also do real time. That meaning that we can provide flood risk warning to asset owners up to 3 days ahead, and we do this on an hourly basis, so that they can be prepared for storm coming their way. We have one client using this today, many clients, but one of them is a hospital located in Houston. They used our technology during Hurricane Beryl, which hit the Houston back last summer. They used the technology to take decisions prior to the storm, getting critical staff like doctors, patients, and so on to the facilities before they need to close it down because of the storm. It is basically better to be prepared and do mitigating actions before your doorstep is flooded. We provide this information on an hourly basis, meaning that everything is updated every hour based on the weather forecast. And we do this 3 days ahead. So then you can do your mitigating actions and be prepared and reduce losses. Our insurance product was launched late 2023. We signed our first US customers in the 23 on the real-time product. We have established our US office this last year in mid-24, where I'm located now in Boston. We raised 4 million euros last summer, giving us the power to scale into new markets and also to grow our team. The goal now is to sign a first client in Australia this spring. Very exciting times going ahead there. And now it's all about scaling. 25 and 26 is all about scaling, both the commercial and also the technology. So if you're looking for better flood risk data, please reach out. Happy to explain more and also to give a free trial. Thank you so much for your time.
Hi, I'm Brian Kibembe, Partnerships Director at Fintech Sandbox. Thank you for joining us for our 11th demo day where we showcase cutting-edge innovation from startups in our Data Access Residency. At Fintech Sandbox, I connect our corporate partners with our vibrant fintech ecosystem, fostering collaboration and innovation. Our partners get exclusive first-hand access, immersing themselves in groundbreaking fintech ideas, forging valuable connections, sparking thought-provoking discussions, and fueling the next wave of industry breakthroughs. At Fintech Sandbox, we're all about accelerating financial innovation and empowering early-stage startups to thrive, and none of this would be possible without our incredible sponsors. Their support is the backbone of our mission, making events like today and our ongoing work a reality. A massive thank you to them for driving this ecosystem forward. If you're interested in supporting our work and engaging with our community, whether as a corporate sponsor or an individual contributor, I'd love to chat. Please reach out. Quick reminder, be sure to check out the poll tab to follow up with the specific team and learn more. We open up a poll during each pitch if you'd like to connect with any of the companies. And feel free to ask questions in the Q&A tab. Just be sure to note which company they're for. Let's keep the momentum going. We have the first of our FinTech in Focus spotlights touching on key themes and insights across FinTech. Fidelity Center for Applied Technologies' Richard Murphy will be discussing the value of collaborating with the FinTech startup ecosystem. Then we'll dive into more demos. featuring embedded banking solutions for non-bank institutions, no-code trading strategies, AI-powered supply chain analytics, and financial inclusion technology for vulnerable customers.
The Fidelity Center for Applied Technology, or FCAT, is the disruptive innovation arm within Fidelity. Our purpose is to anticipate what will happen in the future and to prepare for that both for our customers and for the firm. We're inspired both by breakthroughs in emerging technology, as well as monitoring social trends that will shape the future. We approach opportunities through our scan, try, and scale model, exploring widely, experimenting purposefully, and then growing real opportunities to impact. Our team comprises of dedicated research functions, incubators in advanced computing, quantum, AI, blockchain, and emerging technology, particularly with a focus on spatial computing and digital interfaces. We also have teams driving to scale with new products and capabilities directly to market. In addition, and this is the part I'm most excited about, we have an innovation ecosystem team that works closely with exciting startups and others who are part of inventing the future. In terms of why Fidelity is in the startup space, entrepreneurship has been a core part of our DNA throughout Fidelity's history. I believe personally that innovation is a contact sport, meaning that you have to be out interacting with others across that ecosystem. It's very hard to find truly inspiring breakthrough ideas if you're stuck behind your desk. The startup and broader innovation ecosystem is very much a community, including firms at all stages from startup to enterprise, as well as founders, funders, conveners, academia, regulators, and many others. We see ourselves as active members of the innovation ecosystem. We are determined to be very good citizens in that regard. FCAT has a rare set of skills that can help disruptive tech-led firms to make a difference to those around them. We are active contributors across accelerators and startup hubs. And over the last couple of years, we've also successfully introduced our own FCAT fellowship offering, both in Europe and the US, often in partnership with world-leading community builders. Some of the startups we've met through the fellowship have seen incredible success in a very short space of time, both in gaining investments in their business, as well as achieving notable recognition on high-profile stages, including one being a top 3 finalist at Slush in 2024, Slush, of course, being one of the largest startup high-profile stages in the world. We've already found and partnered with a number of growing and really exciting startups that are going to enable products and services that underpin tomorrow. But we also view this as a non-transactional activity. We are part of a community, and we believe that the more that we give, the more the whole ecosystem stands up, and that benefits us all. In our work to help founders, we focus on those things that matter most to young companies at early stages, often beyond the investment, access to key events and networks, a wealth of mentoring, both from within FCAT and Fidelity, as well as from friends and partners across the ecosystem. We also focus on some of the very basics that every company needs: clear messaging, a web presence, pitch decks, legal services, and the basics of having a place to work and connect.
Hi, I'm Ray Dennis. I'm the founder of Sandbox Wealth. We are a turnkey banking solution for non-bank financial institutions, or as you can see on the slide, we're an open finance platform for wealth managers. And the reason that's important is that independent financial advisors in the US manage roughly $8 trillion of investment assets, but they don't have a captive banking solution available for high net worth individuals that they work with. And so what ends up happening is that these clients will go to a JP Morgan or Morgan Stanley to access these products and services, which means that these assets, these $8 trillion of assets, are at risk if clients have those liquidity needs that independent advisors cannot facilitate. And again, this is important because wealthy clients need liquidity. Folks need capital in order to make private investments, to pay tax payments, purchase a second home. There are a whole broad array of use cases, but these wealth managers that are independent, maybe they're trust companies or RIAs or family offices, et cetera, they aren't banks. And lenders need data that's held by these investment advisors to facilitate the underwriting and origination of loans. And there are no rails that connect those two different groups of financial institutions until now. With Sandbox, we're building this platform that allows these independent financial advisors to plug in seamlessly into lenders to offer their end clients all the different capital solutions they need in order to meet their liquidity requirements. And what you see on the slide is a little bit of a mess of the situation that exists with today's workflow. You have wealth managers operating on behalf of clients sometimes to access credit products, or clients acting on their own behalf to do the same. And it's sort of an every man for himself situation today where there's no cohesive fabric that ties together the delivery of these products until, again, today with our solution, which is that turnkey private banking product. And with Sandbox Wealth, you're going to be able to have advisors logging in and orchestrating a solution on behalf of high net worth customers who then be able to log into the platform themselves to see a holistic view of their balance sheets and cash flows. And lenders will be the third party involved here to, again, underwrite and originate loans. And what you have at the end of the day is an ability to deliver a cohesive set of products through one interface across three different segments. So that includes things like open architecture lending, cash management solutions, domestic and global payments, all the different products you see here at the bottom of the slide. To give you a clearer sense of what we're capable of achieving with Sandbox Wealth, you've got a client here that needed $200 million to facilitate the purchase of a private investment. The assets that we're securing that loan are a $500 million portfolio of structured notes that currently sit with a custodian. Let's call it Fidelity or Schwab. It doesn't really matter. We can aggregate that data on the collateral, further support it with information from a partner of ours called Halo Investing, which further supplements the collateral level detail with structured note specific information. And we can get into that a little bit later. And ultimately, we package all of that together along with balance sheet and cash flow information, which then gets fed to a lender that is able to underwrite and originate that loan without having to require those assets to be moved to the lender themselves. And that's really the unlock here, is the ability to finance assets held away much more seamlessly while under the care and the strategy that's devised by this independent financial advisor. And that's just one of the many sleeves of solutions we're building into the platform. The whole idea here is that this is open architecture, and that means in terms of not just the products that we're capable of offering, but also the data sources that we're able to integrate. So if you have an existing platform already as a financial advisor that you use to aggregate data, we can work with you to migrate that data over. If you have existing products, including cash management solutions that you already offer, we don't need to offer that through the solution. We could offer everything else, right? So the opportunity here is to be modular in our approach and complement the platforms that these investment advisors operate. And what you have at the end of the day is this system of record, right? So we've partnered with Fintech Sandbox to aggregate a number of different data providers into, again, one solution. So we use Morningstar as an example to gather real-time data on investments. We work with Morningstar again to aggregate data at third parties using their buy all account solution. We work with Plaid, right, as a secondary solution to aggregate data across platforms. So having this be your solitary system of record that's untethered from a financial institution gives all of the parties involved in this ecosystem a lot of flexibility in terms of maintaining data over time, despite who the underlying financial institutions are. Now that we've got all this data, right, we have information on all of your different accounts as an end user. You can orchestrate payments across those financial institutions. So without having to go through a Sandbox bank account, let's say, through a sponsor bank that we're integrating, you could theoretically move capital from, Citibank to a Capital One without having to, again, go through us as an intermediary, all through one interface. You're not logging into any of these individual platforms. You can orchestrate all of that through one solution. We talked a little bit about liability management, but the key here isn't just accessing capital, it's the ability to report on your strategic use of liabilities within your balance sheet. So getting a look at your credit cards and revolving and term loans and long-term liabilities, et cetera, and having that sort of strategic view into how you manage the right side of your balance sheet is as important as accessing those solutions themselves. And last thing would be just holding operating cash. I mentioned building in those deposit solutions into the platform, giving you an ability to manage both domestic deposits in the US and eventually operating cash that you may hold abroad. And the really nice part about the platform is that we're building it today, right? So we can incorporate all the latest innovations, whether it's real-time payments or FedNow. Here you see a quick demonstration of our AI feature called Navigator, which is wrapped around all the data that's provided to us via the client and is allowing us to provide custom feedback based on the data sets that are being provided through the client again. So, really, at the end of the day, those are, the really nice things about what you can see on the front end of the platform. But on the back end, it's API first, meaning we can feed data very easily in whatever, buckets we want to send it through to financial advisors, to lenders, et cetera, right? Without having to worry about using our interface. They could very well plug it into an existing system or solution that they already offer. Again, I talked about it being customizable. That's a critical component here. There's a lender-related solution, so lenders can come in and underwrite and originate loans far more seamlessly. And the core of our platform is that it is advisor-centric. We really feel that those person-to-person relationships are critical, and we wanted to augment the advisor experience as much as anything. And our model is reflective of that, right? So we charge at the advisor level. We charge up to $125 per seat for each advisor for an unlimited number of clients. And that really is, meant to spur activity and to drive interest in using the solution if you've paid for it, right? So it isn't meant to be onerous. As you can see, we earn revenue in a number of different ways. So if we essentially facilitate a lending transaction, we'll earn anywhere from 25 to 100 basis points, which may be a one-time or recurring fee depending on the product. And earning Fed funds plus 75 basis points on cash is also a really unique feature here. So, tying this all together, today we've seen a remarkable amount of interest in what we're building at enterprise level. So those institutional relationships are driving $1.25 million of pending annual recurring revenue. That starts with Halo Investing and the Invictus Collective, which are our partners on structured note financing transactions. We're a part of the Mass Challenge FinTech cohort, working with MassMutual to devise solutions around their banking and lending offering. I won't go through all these names, but you can see, again, some really interesting names there on the left. On the bottom right, you have all the lenders we're working with. So that would include Goldman Sachs again on structured product financing and Morgan Stanley. And on the bottom left, you see the transactions we're working on, over $200 million of live opportunities. So in the long run, we're just scratching the surface of what this platform is capable of. In this first quarter, we're launching, the structured note financing business, gradually getting into account-to-account payments to allow that seamless flow of capital between institutions the client may already have, then baking in deposit and treasury solutions in the second half of the year, along with enhancing the lender workflows through underwriting and originating transactions before getting into some of the really unique functionalities we're planning for 2026. So, it's been a pleasure to demo the product for you today. I'm really eager to answer any questions that everyone may have, and looking forward to connecting with everyone in the near future. And last thing, thank you so much to the Fintech Sandbox team. Without any of your support, I don't know that any of this would be possible. So thank you very much.
Hello, I'm Tom Mallon, the new data partner manager at Fintech Sandbox. I hope you've been enjoying the Demo Day 11 presentations as much as I have. I've recently joined Fintech Sandbox, and I'm excited to be working with the startups in our Data Access Residency to help them access the data sets they need to build and test new products. Having come to Fintech Sandbox from a startup, I understand firsthand how important it is to have ready access to free test data. I'm also excited to be working with our data partners to explore new use cases for their data and to help them turn free trials into profitable engagements. If you have interesting data sets that you'd like to make available to the talented entrepreneurs in our program, please reach out to me. So far, you've seen how access to data from our partners is being used to develop precise predictive models for flood risk and to build turnkey banking solutions for independent advisors and their clients. Remember, you can submit questions during the presentations, and you can use the poll tab if you'd like to follow up with a specific startup to learn more. Next, you'll hear from Level 2, a London-based startup which is building a fully visual no-code, systematic trading strategy creation platform for active traders.
Imagine a world where automated trading is not just for the professionals, where anyone, regardless of experience, background, education, or even financial status, can use data to automate their trading to closely monitor the markets. Hi, I'm Andrew, CEO and co-founder of Level 2, and we're making fully automated financial trading simple, accessible, and scalable for retail traders worldwide. No coding, no complexity, just a simple, intuitive, visual approach that empowers traders to make smarter, data-driven decisions. Right now, automated trading is out of reach for most of us. While hedge funds and institutions have the edge with their sophisticated algorithms and systems, most of us are stuck with outdated platforms that require either advanced coding skills, expensive market data, or complex software. Level 2 changes everything, and it's so much more than just a strategy builder. As the first fully visual trading tool with the simplicity of drag and drop, Level 2 bridges the gap between analysis and execution, providing aspiring traders with a single platform for analysis, design, and deployment, all wrapped up in a fully visual interface. So let's quickly walk through the user experience of creating an automated strategy with Level 2. Today, we've got our eyes on Carvana as there's growing concern about its future growth prospects and general volatility in the used car market, making it a prime candidate for a quick short trade. To set this up, I'll head to the Create section, simply type in Carvana and choose the 60-minute time frame. Firstly, let's use a pair of moving averages to identify the downtrend. So we'll add a short moving average, which will set the time period to 50. And then we'll combine this with a longer moving average. And this time we'll set the period to 200. The logic here is that when the 50 is lower than the 200, the trend is down. Next, we'll create a second rule, this time with a Bollinger Band and the current price. This time, the logic is going to be when the current price breaks below the lower Bollinger Band, it's a continuation of the downtrend, and we want to open a short trade. To lock in our profits and manage our downside, we're going to set a 2% profit target and a 1% stop loss by entering those on the buy block here. Before we go live with this setup, we're going to run a quick back test to see how it would have performed using historical data. So here we can simulate the performance by varying the trade size and seeing how it would have performed. We can also fine-tune some of the key metrics, such as adjusting the profit target or the stop loss, which we set to 2% and 1%, or we can even try the same idea against a different time frame to see how it would have performed. So we'll do that now quickly. On the chart on the right, we can see all of the historical trades that were opened and closed. And then in the table directly below, we have all the corresponding data. So completely transparent. Once we're confident and we've reviewed the results, we can quickly check the drawdown, quickly check the returns over a daily, monthly or yearly basis. And then when we're ready, we'll deploy this live. We'll simply activate it and then Level 2 does the rest. There's some risk management tools here we can choose to switch off for certain days or to further manage the downside, for instance. And then once it's deployed, those two logic statements are live. Whenever they're triggered, a short trade is going to get triggered and sent to the broker via the API, and the trade gets executed. In the meantime, we can closely monitor the performance of this strategy and see all the data being pulled straight back into the Level 2 platform in real time. And we could see a trade actually just got triggered in the very moment we deployed, and the data is there. So now is the perfect moment to bring the Level 2 product to market. Leading broker brands around the world are all actively targeting the sophisticated active trader. seeking new features that will boost user acquisition and enhance the overall trading experience. The Level 2 platform is fully developed and already live, integrated with data from Polygon, one of the Fintech Sandbox partners. We've also successfully secured contracts with our first 3 major partners in the US and started to generate early revenue. And this is all before the official launch. Over the past 12 months, we've had more than 50,000 traders register with minimal marketing spend, and that's all through our university outreach program. So this highlights the growing demand for technical trading and validating our product market fit. Level 2 is free for traders. We generate revenue through a very small usage-based fee, which we charge to brokers, and that's for the compute time, which is used to deploy each strategy. Operating solely on a B2B2C basis, Level 2 enables brokers to white label our solution. There's no integration cost. The usage fee is minimal per compute hour, and this makes it a very easy decision for brokers to choose Level 2 and integrate to differentiate their product offering, boost new client acquisition, and increase trading volumes, all without any upfront expense. We find traders who are, of course, focused on maximizing their returns rarely turn off profitable ideas, and they'll also work to refine rather than disable initially unsuccessful ideas. And this ensures that our success and the overall usage on a compute basis fully aligns with the success of all of our users. Level 2 is uniquely positioned to meet the evolving needs of a new generation of active traders that we're starting to see emerge. This is a group who are tech savvy, data driven, and they want real-time insights, seeking tools that enhance the overall experience. As this group of traders gets more sophisticated and develops in experience, they will be seeking platforms that offer dynamic, data-driven, but automated trading solutions. Level 2 delivers on this, providing an innovative new tool that enables brokers to empower their audience with the exact same cutting technology that we've all already seen revolutionize professional trading worldwide. The future of trading is evolving rapidly, with several signed broker deals already and a rapidly growing pipeline of major brands. We're positioning ourselves to be at the forefront of the next transformation in retail trading. And this is where you come in. If you're a trader, your feedback is invaluable to help us refine and improve Level 2. Tell us what excites you, tell us what you need, tell us how you trade, and let's see how we can make automated trading work for you. If you're a broker, let's talk about how Level 2 can enhance your offering, boost engagement, and increase trading volume. And if you're an investor, let's explore how Level 2 is already tapping into explosive growth amongst active traders. As we continue to innovate and expand, we're not just raising the bar, we're raising the level of what's possible in retail trading. Thank you for listening, and please reach out if you have any questions or if you'd like to find out more.
Hello, everyone, and I hope you're having a great demo day. I'm Pamela Alexander, and I'm head of corporate citizenship at KKR, which is a global investment firm founded almost 50 years ago with offices in 17 countries. Together with our team members at Global Atlantic, I direct our partnerships with nonprofit organizations like Fintech Sandbox that are doing innovative work in support of communities and economic mobility. This type of engagement is important to us at Global Atlantic and KKR. It's really part of our corporate DNA, and many of our community partners and programs around the world are focused on small businesses. That's because small businesses are the backbone of the economy, driving job creation, innovation, economic growth. And we are very, very excited about our partnership and support of Fintech Sandbox and the innovative work they are doing to drive economic growth, social progress, and, frankly, address unique challenges, breaking down barriers and opening pathways to create new opportunities for development and success. They are truly moving the needle at Fintech Sandbox in the fintech space, and we are really proud to support the work they do. So with that, let's get back to Demo Day, and I hope everyone has a wonderful experience. Thank you.
Hi, everybody. My name is Eric Zager, co-founder of Calculum, and I'll be presenting our solution today to you. First of all, I want to thank Fintech Sandbox for having us, and I'm excited to show you what we built. So all companies around the world negotiate payment terms with their suppliers. They're also negotiating pricing, quantity, quality, but the payment terms is what we are focusing on here. And to date, most companies have a standard corporate policy that they have net 60, net 90, or for the very wealthy ones, they hire McKinsey, Deloitte consultants to come in for a few $100,000. In a couple months, they present a PowerPoint on the top 200 suppliers on what they should offer, mainly around publicly available information without a database. So this is why we changed the way that the terms are being optimized and negotiated with our Calculum platform. Why this is important is payment terms are the timing between when you receive a product or the invoice and when you pay. And optimizing this can help your company increase cash flow, cost reduction if you want to use data analytics as leverage to get better pricing, as well as improve your financial metrics such as days payable outstanding, cash conversion cycle, and working capital turnover. We built the platform that we call ADA. It's 100% automated. It leverages learning algorithms and is fully anonymized. So we're never sharing relationship data, but what we do have is a database of payment terms that we can say, these suppliers of yours or your customers are accepting terms from other partners within the market using similar spend volumes. And maybe you should approach these suppliers or customers about raising or lowering terms respectively on that. But we are never sharing who the other side of that party is, because honestly, it's irrelevant and not necessary for the negotiation. And second is to be in compliance with working with these large companies. They don't want their relationships being disclosed. So the Calculum platform has no restrictions on geography, industry, currency, or company size. We work with companies in food and beverage like Campbell's Soup. We work in pharmaceuticals with companies like Roche Pharmaceuticals. So there's really no limit. We don't do any payment processing. So we're just data analytics. There's no country that we can't be in. And I would say our strongest data points are on suppliers in the emerging markets, India, Thailand, China, Brazil, where we have a lot of clients that have suppliers there, and we have a lot of data on companies in those countries. Our vision for Calculum when we started it was democratizing data and improving transparency when it comes to optimizing payment terms with suppliers and customers. And that's what we're doing with Calculum, is bringing that transparency, making sure that companies aren't indirectly financing their competition. How it works is first we look at how our clients line up against their peers in the market using publicly available information, DPO, DSO, cash conversion cycle, to see high level, is there an opportunity? We then match and enrich the suppliers of our corporate clients. Roughly, we're matching and analyzing 90% of the full annual spend, both direct and indirect. And when we do that, we're flagging for SME status, small, medium enterprise. It's a hot topic right now in the EU. Where we are looking at that, we're looking at applying the local laws of the supplier's country to see if they qualify based on revenue, employee numbers, annual turnover. And then we're also looking at payment terms legislation to see if there's any limits on negotiating terms with a supplier based on their country or combination of country, industry size, status, and whether or not that law is enforced or a recommendation by the government. We then show the low-hanging fruit. Out of the 90% analyzed, which supplier should you approach first? And that's why we built this 9-box model, where the y-axis here has the probability of a successful negotiation, and the x-axis, the cash flow impact on the balance sheet. So these red boxes at the top right, boxes 1, 2, and 4, are the low-hanging fruit. And you can select different boxes to see which are included. And we have a list of suppliers below that are included in those boxes, and then a breakdown of statistics. So right now, boxes 1, 2, and 4 are selected. And we see that it represents 13% of the suppliers analyzed, but it represents 55% of the expected cash flow. So these are the ones to approach first by the category managers. The next module is where we help our clients set up individual plans, customize around low-hanging fruits or geographies, however they want to break it down and tie them to specific category managers so that everybody knows who they're responsible for and when they're expected to contact these suppliers. And then a way to manage and track the entire progress of the negotiations. So that treasury procurement can see how the team's performing, how much cash flow has been unlocked, and the category managers can see how they're doing and who to focus on next. We also give the ability for companies to calculate if they should use virtual card, simulating it, as well as which suppliers accept it, and look at the trade-off between the float, the rebate, and the cost of the supplier for the fees. Every supplier, we give the best reasons to negotiate on with the individual supplier based on the relationship. And we give all the argumentation, such as, are you paying early, late, or on time? What suppliers do you do business with that you have terms all over the place with, 55, 60, 65, same supplier? Or do you have two suppliers that are owned by the same parent and we can negotiate on the parent level? Also look at industry region standard. So, similar industry and regions that you work with, harmonize there. Do we see the supplier before in our database? And if so, what are they accepting on average? Third quartile with similar spend volume. Peer group standard is widening the scope, looking at similar suppliers, the similar spend volume. Buyer standard, if they want to have customized standards for specific countries or regions, we can implement that. Financing, if you want to approach with a financing program, I'll speak more on that next slide. And payment terms regulation, as I mentioned previously. Companies sometimes want to look at setting up supply chain finance programs, sometimes called reverse factoring, or already have them in place, and they can use our tool to simulate this and help grow their programs if they already have one. We look at the cost of debt of suppliers along with their WACC and can segment them based on the probability of success that they will join the program that they have. We also have a calculator embedded for every supplier, where we call it the payment terms versus price to see the trade-off. Let's say you're on the phone with the supplier and you want to get a 15-day extension to 90 days, but then they come back immediately and say, hey, we have to raise pricing by 75 bips. They plug it in. Within 1 second, we see this is not a good deal for the buyer, a good deal for the supplier. So you can see the impact on both. Also within here, you can simulate supply chain finance and virtual card. Next, we give a 360 view of all your suppliers. So financial ratios, ESG scoring. Sometimes our corporates already do scoring via ESG. They can upload those existing scores. Payment terms optimization, credit rating. Every supplier, no matter how small, private, emerging markets they are, we have a credit rating. We do that through a shadow rating process if they don't have public debt available. We're also looking at buyer leverage. So how much leverage do you spend annually, revenue compared to that, or how much is your spend volume compared to their annual revenue, as well as parent mapping. We also can help our clients negotiate with the tail spend with pre-approved messaging, so the ones they would have ignored. And a success case with Calculum is a multinational pharmaceutical company unlocked over $210 million on $6.2 billion in spend analyzed in just within the first 6 months of working with us. So there's a lot of opportunity. And how it works is quite simple. There's no ERP integration. There's no IT involvement. We just need a few data points after getting an NDA signed. And we do this process for free on a complimentary basis before as a POC to prove that we have value, have data on suppliers, and that there's opportunity. All we need to know is the supplier name, buyer name, how much you're spending, the currency, and what. It is an annual subscription, 12 months, standard, and we do it based on number of seats and the opportunity so that the ROI is clear. Please, if you have any questions, reach out to me. My email is eric@calculum.ai, and my LinkedIn QR code is here. Our website is calculum.ai. Thank you.
Hi, everyone. I'm Adam Fox, Head of Research and Development at MassMutual. I hope everyone's enjoying Demo Day in London this year. I wish I could be there in person. Regardless, I'm excited to see London, Massachusetts continue to blossom as global fintech hubs. MassMutual's work with the Fintech Sandbox is about opening doors for everyone trying to break through in the fintech ecosystem, not just in Massachusetts, but globally. Our involvement gives us the opportunity to engage with some of the leading minds in fintech, like the participants of this year's Data Access Residency program, as they develop their careers and their businesses. Fintech Sandbox's Data Access Residency program is important because it provides startups with access to real-world data to develop innovative products and services that will empower people to prioritize their physical, financial, and mental health. MassMutual's vision is to provide financial well-being to all Americans, and we believe that there's a direct correlation with people's health and wellness and their financial state. Many in the US and around the world lack access to basic financial services. Things like bank accounts and debit cards are out of reach for many due to their location, mobility, and socioeconomic status. Likewise, many in the US either don't have access to important medical screenings or are not regular with checkups, which can then lead to serious health problems that cost thousands of dollars and impact their ability to work. We recognize that mental, financial, and physical health all influence the longevity of people's lives, and taking a holistic approach to wellness can lead to a more fulfilling and balanced life. By prioritizing one's financial health and physical well-being, we can reduce stress, improve our quality of life, and be set up for long-term success. At MassMutual, we've launched several innovative wellness offerings that help our customers better understand and empower them to make proactive, informed decisions about their health. A few of these include a research collaboration with Genomics, where eligible policyholders are offered a genetic risk assessment, which provides information about their likelihood of developing 8 common diseases, including atrial fibrillation, diabetes, heart disease, high blood pressure, high cholesterol, and certain cancers. Access to multi-cancer early detection testing for more than 50 types of cancer, including several of which no other form of screening is available. And access to WISA Assure, an AI-powered mental health app, which empowers policy owners to take steps that improve and protect their mental health. We're also exploring initiatives that incentivize and reward healthy behaviors utilizing data from wearable devices. To enable this intersection of health and wealth, we need good data. Data is critical because it helps us make better decisions, understand problems, and provide recommendations to our policy owners. We're thankful for incubators like the Fintech Sandbox, who provide us with access to startups like yours that are part of the Data Access Residency program and who are solving real-world and real business challenges, as well as also attracting new investments in regional startups, helping Massachusetts become a global fintech leader. I'm excited about what the future holds and look forward to seeing how we can work together to make a positive difference. Thank you.
Hi, I'm Savannah Price, founder and CEO of Serene, the AI-driven platform transforming how financial institutions detect and support their vulnerable customers. Today, I'm going to show you how Serene is helping firms turn vulnerability from a compliance headache into a competitive advantage. The scale of consumer vulnerability is staggering. 28 million UK adults show characteristics of vulnerability, making them 7 times more likely to face problem debt, scams, or financial exclusion. And yet, less than 10% are currently recognized by their financial service providers. But the thing about vulnerability is that it's not just about one group. It can impact any one of us at any time. It's simply what it means to be human. For me, this isn't just business, it's personal. Growing up, 3 of my siblings faced mental health challenges. They didn't always ask for help, and sometimes they didn't even realize they needed it. But their financial behavior told a different story. Missed bills, unusual spending patterns. That was our early warning system. And it made me wonder, if financial behavior could reveal vulnerability in my family, how many millions of others were struggling in silence, unnoticed? That's why I built Serene, to give financial institutions the power to see vulnerability sooner and step in before crisis hit. But this isn't just a social issue, it's a business one. Firms are losing billions in defaults, inefficiencies, and regulatory penalties. The regulators are making it very clear. Firms can no longer rely on manual, reactive, one-size-fits-all approaches that leave most vulnerable customers both unidentified and underserved. But the question is how? What if there was a transformative solution that could turn vulnerability from a risk into a business opportunity, helping institutions act faster, minimize losses, and unlock growth, all the while staying ahead of regulations? The result? fewer defaults, more efficient operations, and stronger, more trusting relationships with customers. And that's exactly where Serene comes in. Serene is the first AI-powered consumer vulnerability engine, helping financial institutions detect, predict, and support vulnerable customers at scale. Our engine consists of 3 core functions. Serene ID detects early signs of vulnerability using transactional and behavioral data. Serene Score assigns a real-time vulnerability risk score, continuously adapting. And Serene Care recommends the next best action, whether it's tailored support, service level adjustments, or specialist referrals. Unlike traditional systems, Serene doesn't just identify risk, it enables firms to take action. And our mission is to ensure that organizations can seamlessly support their customers through life's ups and downs across every product, journey, and touch point. So let me show you how it all works in practice. Here's a real snapshot. As you can see, 49% of customers exhibit vulnerability characteristics, and this is up 5% from last month. We segment vulnerability across health, life events, resilience, and capability, showing firms where customers need the support the most. By diving deeper, we identify overlapping characteristics, giving firms a clearer picture of customer needs. Using Serene Score, we rank customers by risk. High-risk cases get more human support, while others are guided through efficient digital journeys. But whether human or digital, all journeys are personalized to customer needs. Serene also tracks every customer's journey, next steps, and required actions. Nobody slips through the cracks, and resources are deployed efficiently. So let's zoom into a single customer's profile. This individual's current Serene Score indicates high vulnerability risk, triggered by a recent bereavement and missed credit payments. Taking a historic view of this customer's journey, they were first flagged in June 2024 due to new caring responsibilities. But with proactive support delivered, their risk levels decreased. However, a recent bereavement has reignited concerns, prompting the need for a new intervention. In this case, the recommended action is to proactively reach out to this customer to confirm their needs and engage them empathetically. To do this, Serene Care recommends the best time, channel, and tone for each interaction, optimizing workflows and improving outcomes. We also make recommendations for service level adjustments, which can be based on a firm's specific policies. In the case of bereavement, Serene recommends breathing space with a scheduled follow-up once the customer is emotionally equipped to re-engage. We also curate personalized referrals to vetted services. These are tailored to age, location, and vulnerability profile, always ensuring meaningful support. And finally, since every customer journey is unique, some vulnerabilities are transient, while others might require more long-term management. Serene Care is adaptable, with exit strategies in place for temporary needs and ongoing plans for more persistent challenges. Serene isn't just a concept, it's already delivering results. We partnered with Hastings Financial Services to transform how they identify and support their vulnerable customers. Before Serene, they relied on manual processes that were slow, inconsistent, and reactive. Customers often weren't identified until they were already in crisis. But with Serene, Hastings saw a 5x improvement in early vulnerability detection, allowing them to intervene before financial harm occurred. This proactive approach resulted in $500K in cost savings as fewer customers fell into default and operational efficiencies were reduced. On top of this, our predictive model achieved a 0.52 Gini score, which demonstrates its power in anticipating customer outcomes with unparalleled accuracy. As Hastings' CEO put it, this isn't just transforming lending, it's a game changer for all digital retail markets. And so to sum it all up, financial services are at a turning point. Firms can no longer afford to turn a blind eye to vulnerability. But this is more than just mitigating risk. It's about building a financial system that actually works for real people, where vulnerability is seen, supported, and no longer ignored. If you're a bank or lender looking to identify and support vulnerable customers before financial harm occurs, a fintech or open banking provider wanting to embed vulnerability insights into your product, or an investor or partner who sees the massive market opportunity Serene is unlocking, I'd love to chat. Thank you.
Well, how exciting was that? We just cannot believe that Demo Day 2025 for Fintech Sandbox has come to an end. But we really want to thank our startups who presented today. You've achieved such a tremendous amount, and we know there's more to come from you as you go down your journey, and you really impact an industry that you clearly know, you clearly love, and the customers that you're passionate about. So thank you again to all our startups. I also want to thank our guest speakers. They're such a core and central part of how we think about the future of financial services. Adam from MassMutual, Richard from Fidelity Center for Advanced Technologies, or FCAT, and Pamela from KKR. Thank you for sharing such important thoughts and insights with all of us from where we're dialing in. I would be remiss if I also didn't say a huge and warm thank you to the Fintech Sandbox team. We have a tremendous group of professionals who support this vision to help advance innovation in financial services and enable these fantastic innovators. So thank you to Meg, to Brian, to Nicole, to Jim, and our extended family with Elizabeth and Candace. We are so grateful for you and all you've done to make Demo Day a success. Lastly, and as I started this conversation, we would not be here without the generosity of some of the world's most important data providers in the markets, as well as adjacent and different industries. We hope you'll look at our website. There are 40 plus of them who have joined in this journey with us, and we're so thankful. The same goes for our infrastructure partners, as well as those entities that underwrite us. Their donations and from the industry is so important to help us continue this work. Of course, I want to underscore again, we'd ask all of our entrepreneurs who are in the audience to see if we can help you through our Data Access Residency program. Please check us out. Please apply. Let us know of your interest. We're keen to support you. And lastly, we really hope to see you in Boston this fall for Boston FinTech Week. It's a tremendous gathering of almost 4,000 of your favorite friends. It's a place for community come, for us to discuss topics of the day and really dive in to what's important and on the minds of the financial services industry, and particularly those in FinTech. So again, thank you. We appreciate you, and we hope to see you soon. Goodbye.